It has been a week with two massive tech IPOs. We got DoorDash earlier this week, Airbnb right now. DoorDash making that debut yesterday and ended up with a $60 billion market cap, signaling new investor hope in the gig economy. Today, we're anticipating Airbnb's offering in the sharing economy. But which business model represents the bigger economic opportunity? John Ford is here to weigh in with on the other hand. John?
Well, Andrew, DoorDash's IPO was impressive, but the bigger opportunity lies with the sharing economy, not the gig economy. Sharing means you own something and you're renting it out for other people to use. And you know what? That's a huge proven market that's ripe for innovation. Whether it's homes, offices, planes, boats, or cars, there are always going to be people who own things that they're willing to let others use for a fee. And that's why Airbnb, in what should be the worst possible year for a travel and tourism stock to go public, is bouncing back so fast. The big knocks on the sharing economy are regulation and quality. In Airbnb's case, our city is going to lock Airbnb out, and will the accommodations be nice enough consistently? Well, this pandemic has shown that demand for Airbnbs is coming back faster than hotels, and that should make cities a lot more eager to diversify their lodging options if they want their tourism industries to come back, Andrew. Sharing all the way.
Okay, so hold on, though. DoorDash just getting all this attention now. Is that because we're forced to order in?
Well, I mean, on the other hand, Uber and Lyft earned it a bad rap before, but DoorDash is showing us that there's a lot more to the gig economy than losing money to drive adoption. I mean, DoorDash raised about $3 billion over the years. It still has half of that in the bank, despite the fact that it's been gaining share from rivals who are spending a lot more. Plus, let's not kid ourselves. The sharing economy is mostly about luxury items, houses, cars, boats. Most people don't have an extra house or boat to rent out. The gig economy, it's about hard work, and that's something we can all do, and technology lets people have more control over when and where they work. So yes, DoorDash has gotten a lot of hype during a pandemic. It drove the value up, but that's a good thing. The gig economy, Uber Eats, Instacart, DoorDash, lived up to the hype. Yes, there are regulatory hurdles and worker protections to figure out in the gig economy, but the pandemic has shown us that not only is the gig economy here to stay, we almost can't live without it, Andrew.
So, John, do you really think the market is being rational here? I mean, I think that's the real question, the way these IPOs are being valued.
Gosh, that is the question. And I think especially when you look at DoorDash, is there ever going to be a moment where the case gets made for DoorDash more than this year? And this is the point at which that stock is being valued for the first time. So are investors going to end up kind of taking a bath on this? And it priced at 102, which seemed high. And look at it, 180 as of the end of the first day of trading. That's something that investors really have to think about. How long are you going to be willing to hold on to this? But on the other hand, you look at Airbnb. I mean, what would the growth rate have been like if we didn't have this pandemic? Investors need to take the long view on that, too.
Shepard Smith here. Thanks for watching CNBC on YouTube.